Alrighty, traders, welcome to another session here with the FX Big Dog, and we're going to be talking about the pound opportunities. If you've looked at the pound crosses this week, it's setting up some great opportunities. And not just that, is it time to go ahead and let go Bitcoin, or are we on a full rally, or is this just a sideways range? Well, we're going to go ahead and take a look at all of that right in this video. See you right after this. Alrighty, traders, then. So welcome back with another video here with the FX Big Dog, and we are going to be taking a look at the pound crosses. If you haven't noticed, I'm sure you have. We had the news come out this morning around about 2 a.m. this morning, and it reported that the inflation increased in the UK by 3.2%. That's a huge increase, which means it's pretty exciting for the currency itself, because normally when we see inflation rising, it's good for the currency. But it also means it is a leading indicator for the central banks to go ahead and make decisions on raising rates. The question is, can they raise rates? So the expectation is that we should be expecting the pound to actually rally. But how does that compare to what the technicals are telling us? And do the technicals really give us a little bit more insight as to what's really going to go down, even though we may expect a rally in the pound? And is this rally going to be a short-term rally, long-term rally, or just a mid-term rally? That's all dependent on how the technicals are set up. Let's go take a look at the technicals and see exactly what's going on. And don't forget about Bitcoin. We absolutely can take a look at Bitcoin, because that's going to make the markets move on the altcoins, right? You're going to see the altcoins move based on Bitcoin's rally or dip. We're going to talk about Bitcoin as well in the session. We'll do that towards the end of the session. So let's first get into the currencies. And let's take a look at the pound crosses across the board. I'm going to jump into the first pair right here. Is going to be on the pound Aussie dollar. Listen here, I believe the opportunity is huge, and I'm going to go through a couple of things here that you need to pay attention to. So firstly, number one, we can see that there's been this big downside move, and now we have this big upside rally. I'm going to go ahead and put some trend lines in here just so I can look smart. All right, there we go. Now, with that market moving right up to the backside of that trend line, that's already creating an opportunity. So if you're a trader that likes to look for long-term opportunities, looking to swing trade, then think bearish on pound Aussie dollar. All right. So if we go back to the news and we think about the news that came out, we had some news that came out and it showed inflation up in the UK, means that interest rates hike. But if the pound's dipping and not rallying, then maybe that's because the UK cannot, or the central bank cannot afford to raise rates based on where the economy is sitting at the moment right now. So let's go back to the charts. So the opportunity here is bearish, and we've had this big long rally since the looks like the beginning of September. So we had this rally since the beginning of September. So we should be looking at a possible downside move. Now, what we have to do is go ahead and put some fibs in, and I'm going to go ahead and put a fib in right here. And that's going to go ahead and show me how far the market retraced back inside this move, which is all the way up here to the 618 retracement. That's great stuff, right? 618 retracement. So we've got the market moving all the way up to a 618 retracement, which means that, traders, if we're seeing price falling south, and I'm going to go ahead and just move up all the way over here. If we see price moving down south, then we're looking for price to come all the way back down to this level right here. And I'm going to match it up with a 1.6 rate right here. There it is, 1.6 rate. So we're going to see price coming back down to around about the 1.6 rate extension. So this gives us, now this is where the opportunity lies right here. This is approximately 715 pips to the downside. So this is what we're looking for, about a 700-point drop in the pound Aussie dollar. There's your first opportunity right there, ready for traders to get active on. Now, you've got to get excited about this, because even though the market's showing that we have a 700 pip opportunity to the downside, what you have to really think about is, how are you going to trade it? Are you going to go in, enter one trade and take the 700 pips on the way down, or are you going to enter multiple trades based on a lower time frame? Now, I am looking at a 4-hour time frame, which means that if you want to look for the opportunity to grab more pips and more trades, then you may want to go down to a 15, 30 minute, 1 hour time frame and trade the swings on that time frame. All right, so that's up to you how to trade it, but the opportunity is there. Let's go ahead and take a look and see what else we've got going here on the charts. So this is the pound. Let's jump into pound Canadian. Now, pound Canadian right here, this, believe it or not, if you look at the chart right here, you're probably thinking to yourself, man, this is sideways, big dog. This is sideways. How can this even offer us an opportunity? Well, even though it's sideways, keep it in mind that even though the market's sideways, there's still opportunity when price comes back and forth between tops and bottoms, right? Between resistance and support. And so if I had to say to you, does the market trend 365 days a year? Does the market trend 365 days a year? And the answer to that should be yes, it does. And if you're saying, well, big dog, that's not true because the market does consolidate 70% of the time and only trend 30% of the time. Well, you see, this is the trick. The trick is this, that when we say the market trends 365 days a year, it doesn't necessarily mean on the same time frame. It means that if you take a time frame that's consolidated, like a 4 hour right here, but you move it down to a 15 or a 5 or a 10 minute time frame, that time frame is trending. So you will find a trend 365 days a year. It just matters what time frame you're looking at. And so that you got to think outside the box when you think about trending, right? And so if you've got a good trend strategy and you love this trend strategy, but you think to yourself, I can only use it 30% of the time because the markets are consolidated 70% of the time, then just know this: you can still use that strategy, but you just got to change the time frame to trade that strategy. So when you see consolidation, do what I'm going to do right now. All right, check this out. I'm going to go down to a lower time frame. So here I'm already seeing, this is what's so exciting right here. I'm already seeing that the market's telling me that we are consolidated. And the reason why I can see that it's consolidated is because of this reason. Take a look right here. We had a swing, high and low. Market dropped back down. Got to the support right here, or very close to it. Then rallied up to take out that high. When you see these type of things, then you see the market moving in these like ABC moves, right? It's not moving in a 5-wave structure, but a 3-wave structure. It tells us that we are consolidated. And so if that's going to be the case, right here, let's just go ahead and get this one out the way. Then what we want to do here is we want to take a look at this. Now, I'm going to go ahead and put in some resistance here. Okay, so here's resistance. Now I'm going to get real complicated right here. I want to put another support level down here. So now if I zoom in closer up right here, take a look at this. This tells me that we have, okay, I should take that behind it. It gets in the way. You know what I'm going to do? I'm going to do this. Let's go to the settings here. And I'm going to go to this is right here. I'm going to reduce that. It's too bright. There we go. All right, perfect. There we go. So what I'm looking at right here is I'm looking at resistance at the top. So now that we're at resistance, we should see the market dropping back south, specifically if we're seeing pound weakness. We should see another 216 pip drop. So pound Canadian, if you're trading pound Canadian, get excited about pound Canadian, because pound Canadian is telling us that we could be looking at a 215 pip drop minimum, and if it breaks through that, there's another opportunity we can trade below that. Check this out. So if it breaks through that level, then we can start thinking about not only trading a 216 pip drop right here, but if it breaks through here and comes back to the backside right here, here's another opportunity to trade it back down to the next support level. So what is the next support level on this? Well, let's go ahead and compress. And you'll see here that if it breaks through this level, right, that's your 216 right there. But if it breaks through this level right here, we're going down another 448 pips. So if you add it up, we're looking at close to 700 pips net profits, all right, all these net pips. So we're looking at about a 700 pips. So listen here, traders struggle with one thing, and that is directional buys. All right, traders really struggle to find directional buys. But once you understand where the markets are moving, it makes your job a lot easier to trade when you're trading a strategy or on a lower time frame. It's a lot easier once you know exactly where the markets are heading. Once you get the directional buys, that's the easy job, is to trade it on take a strategy, a trend trading strategy, and trade it in that direction. So what you should be doing on the pound Canadian dollar, as well as, of course, we looked at the pound Aussie, you should be thinking bearish. Look for all signals going bearish and trade all the bearish moves to the downside. So if the market is in an oversold condition, it's time to stand aside. Wait for the correction move, let it go back into an overbought condition, and then go ahead and look for signals in the overbought condition to sell it back down south again. That's the best way. And if you can find resistance, if the market's trading against resistance, sell it off the resistance and look for it to go down to support again. Now, that's an easy concept, right? But now let's go into, so we've looked at the pound Canadian. Let's go to pound JPY. And again, I'm going to go through it very quickly right here to show you the opportunity. And I'm going to go ahead and clean up all the charts right here. There we go. Okay, so if I look at the pound JPY right here, and I'm going to bring this a little bit down there. All right, there we go. So if I look at the pound JPY, now remember, I've compressed it. All I want to do is I want to see what it looks like on the chart right here. And I'm looking for patterns. I'm looking for things that I can use to trade. So first thing, number one, I noticed that it did take out the low right here before it rallied up. Then I look over here and I see, okay, we had a wave 1, 2, 3, 4, and 5 down here. So which means that this is starting to become a larger wave right here. All right. So we've got a nice little wave going down here. Swing high, swing low. And then I'm going to take some trend lines. I'm going to draw a trend line across here. In fact, let me see if I take this and I go across here. That didn't give me too much to go with. Okay. Let's see if I go from here and draw a trend line going across here. Okay. That's showing something there. Okay, so I've got a couple of things here. There I've got support right here. And now the market's gone ahead and we're seeing now resistance. Hang on, resistance. Right here. Okay, so now that we've got resistance, let me see if I've got a trend line going across here. Oh, look at that. Okay, so we've even got the market trading below this trend line. So let's go zoom in a little bit closer up. So this is a 4-hour time frame, okay? And so now when I go down to a lower time frame, then what I'm going to look for right here is a pullback and sell on the resistance. So if I move this down to a 15-minute time frame, then this is what it looks like on a 15. I'm going to draw in my fibs from the high here, right here, and I'm going to go all the way down here. Why am I doing that? Why am I not going any higher than that point right here? All right, the reason why I'm not going any higher than that point because I know. Oh, hang on, wait a minute. I've just seen here. 1, 2. Hold on, wait a minute. Oh, look at that. So we had this big, large swing, pull back to a very shallow retracement, came down to the 1.618 right here. So I need to go ahead and mark that off by doing another fib from here. Past the 1.618, I'm going to go down here and mark it off there. And so what I want to do is I want to mark off this place right here, which is the wave 1. Mark it off as my resistance. Because if we are in a wave structure that looks something like this, it's going wave 1, 2, 3. We could come back up to a 618 retracement. We could come back to the backside over here, which is the wave 1. And then we could go ahead and sell off back down to our 5th wave. Right? And so right here, if I had to look at the pound JPY and I have to look at a strategy to be able to trade the pound JPY, I would be thinking about a couple of things here. Is there something that's showing me that we may end up heading south? Well, I could use divergence, all right? Now, if you look over here down, look at the oscillator. See how the oscillator is moved south, right? See here how the oscillator is moving south right here? Notice that price is actually moving down. So what I need here is I need a slight rally. I need price to rally up to around about the 618 bounce, maybe a little higher than that, but I need price to rally up. So if we can get a little spike above this previous high, and that previous high, if I have to pull up a number right here, we're looking at, let's see here, 151.46. If we see price trading above 151.46, we can start thinking about selling it in the zone. So this is going to be our sell zone right here. All right, just go ahead and mark it off. I'm going to go ahead and let's just do text here, sell zone. All right, so we're looking at a sell zone right about here in this area. All right, so we're looking for price to sell back down south right here. So if we can get price to sell back down south after it takes out that high, what is the opportunity on this particular pair right here? Well, that looks like we could drop back down to, looks like about a 93 pip. So it's a 93 pip drop right here. So if you're looking for something small, a small opportunity, we could grab a 94 pip trade right here. All right, that's a 94 pip trade. So what I would do is when I see such a low or a small pip range on a trade, what I would do is I would actually start thinking about maybe using a leveling cost average type strategy. Something that looks like this right here, where I would go ahead and enter a trade here on multiple positions, build up your positions here, knowing that price is going to stay below 51.74 right here. I'd build up on positions here. Then if price goes down south, I'm going to get a lot more buck for my money when it drops back down here. Even though it's a 94 pip drop, you know, I've managed to pick up many positions right here to load the bus up, so that when I get here, I'm getting a lot more profit. But what I'll do is I would not trade above here unless I see something bearish confirming. So if price does go against me and takes out that previous high, then all bets are off. I've got to stay below that to stay bearish. I have to stay below this level right here to stay bearish. If it goes above that, then I'll be looking for a way to get out of my trades and get out as very little as possible. So lose as little as possible and get the heck out of Dodge. All right? So this is what the pound JPY. But if I'm correct with my analysis and everything that's lining up on the other pairs, meaning bearish pound, then yeah, we should absolutely see a bearish move on the pound JPY. Good opportunity there. Let's take a look at the next pair. Oh, look at this. I mean, you got to see this, right? This has got to scream bearish right here. All right, now if I do a trend line from the bottom right here going up, then you'd look at this and go, oh no, this can't be bearish. This can't be bearish right here. We should be going bullish. But this is a possible breakout right here. All right. So if I go ahead and look at this, I would look at the pound Swiss franc setting up with a, here it is. It's a beautiful layout right here. Check this out. Okay. We got wave 1, 2, 3, and then it went into an irregular flat, and then 5 down here. So 4 and 5, and now we've gone ahead and taken out the high right here. That to me indicates that we should see a sell-off on the pound Swiss franc. Now you think, well, big dog, what about this trend line? Well, look how much pips we've got before we hit the trend line. So if you're getting in right here, there's a lot of room for price to still move back down to this level. So let's take a look and see how what that looks like. Okay, that looks like this. So if we sell in right here, we're going down to the trend line. We've got what, 53 pips. So you've got at least 53 pips before it even gets to the trend line, right? And if it breaks the trend line, what is the downside target? Well, let's get our fibs out here. So we're looking at the market dropping back down to this level right here. And that level is going to be the 1.618. And so on this trade, we're looking at around about 152 pips. So it's 152 pip opportunity, right? And if you look at the oscillator down below, I'm starting to see a little bit of flat divergence here. You can see price is slightly higher, but it's slightly flat. I call it flat divergence. But here we got a nice little trend down. All right, so we got divergence here. We should be holding up at that level. If it does pop up a little higher here to the 618 pounds, yes, this would be another strategy. I would want to go ahead and do some cost averaging in. So I'd want to get in over here. I'd want to get in over here and start leveling in right here to see price move down here. It's 150 pips opportunity, but you can build up at multiple positions in this position right here. So there's a great opportunity there, specifically for those who want to chase after some smaller pip ranges. Now, remember, it doesn't matter if it's 150 pips or it's 400 pips. Your risk is going to be the same, and your profit is going to be 3 times that amount in most cases. Okay. All right. Pound New Zealand dollar. Pound New Zealand dollar. Let's go take a look over here. And frankly, this is a 15-minute time frame. Let's go to 4-hour. All right, take a look at the 4-hour right here. Oh wow, that was the 15-minute time frame that I looked at on the Swissy. Wow. Oh wow, look at that. Okay, so if I look at we looked at the 150 pips on the 4-hour. Sorry, on the 15-minute. But look at the 4-hour right here. The 4-hour is giving us a target a lot further down south right here. So this is a range that price has been in, and when we break out of that range, so the 15-minute time frame is going to probably give us an opportunity to get 150 pips, get back down to the bottom of the range right here, and then if it breaks that range, we've got another target further down south right here that is approximately 228 pips. Wow, now that I'm looking at a 4-hour time frame, we can see that there's a lot more opportunity here than we think. The great thing about this is we've got your resistance right now, and so we're now anticipating price to go back down to support, which is about 150 pips away. But if it breaks that, we've got another 228 pips to the next target and support at around about, what, 23.48, so 123.48. So this is really good right here for a trade opportunity. So the 4-hour definitely is offering us bigger targets, bigger setups. So which means if we trade the lower time frames, we can grab those those 80, 100, 150 pip trades and just build up your positions right there. Okay. All right. So if I go back to New Zealand right here, well, this is it right here. This is the New Zealand. And by the way, you got this big spike up here to the upside right here. I'm still seeing it as a range. So if we come back to retest the backside of the range, I'm going to be looking at the top and bottom right here and say, okay, we've got a 328 pip range. And so if that's going to be the case, then 328 pips, we've actually, no, we have not. We have not fulfilled that yet. It's right here. So which means that if price comes up to the backside of this trend line, or the backside of this support level right here, we would then be expecting price then go ahead and work its way back down. So something like this, we have trades back up, hits this. This will be a great sell opportunity right here to sell it back down, to at least come down to around about the 127 right here, which is priced at about 192. So if 97, or let's call it 96.50, if we get close to 96.50 on the pound New Zealand dollar, it would absolutely be looking to drop back down to about 92, which gives us about a 450 pip opportunity. All right. Now, a lot of you being, so there's a great opportunity on the pound crosser right now. Really great opportunity. And it's going to be a case of using the best strategy. My strategy I love using on these type of trades is a cost averaging strategy. So anytime I see any sort of signal on any of my lower time frame strategies, if I get bearish signals confirming that I should be selling, I would be looking at selling those and grabbing short-term profits, because you never want to go in this type of market. You're not looking for long-term goals right now. Short-term goals, in and out of the market, do some intraday trading, maybe intra-week trading, get in and out, take your profits, get the heck out of Dodge, right? Good trade setups. Now, I know you guys have been waiting for the Bitcoin reveal in the sense. Let's take a look at Bitcoin, take a look and see what's going on. I want to go ahead and show you what the altcoins are doing and what opportunities are really presenting itself that are going to be good to get in on. So let's take a look at the Bitcoin chart right now. So I'm going to change it up over here, and I'm going to actually go to the BTC dominance chart first, and take a look at BTC dominance chart. BTC dominance chart shows us that we have not reached our fifth wave down here yet. And once we get to that point, then I'm expecting a Bitcoin dump. So we're not there yet. And this pretty much lines up with what I'm seeing on Bitcoin. The great thing about it right here is, oh, by the way, the further I go down on the dominance chart, the more I'm going to see Bitcoin rally. And look over here, we get a nice bit of divergence here as well on this 4-hour. So this does make this a lot more exciting. So go to Bitcoin. Check out Bitcoin. We drew in the wave 1, 2, 3, and 4. We had a nice little correction move back up to wave 1 right here. Despite of that big spike down here, we're now starting to see the market rally back up again. It's all part of the plan. What is the number that we've got to watch out for? We've got to watch out for 57,000. 57,000 is a projected my fifth wave. At 57,000, I'm going to be concerned about Bitcoin's sell-off. And it's not going to be a sell-off to some of the rumor that you've heard going down to 20,000 or 22,000. It's really going to be a sell-off back down to the fourth wave low. What is the fourth wave low? Well, it's the low that's just recently happened right here. So we're going to see the market drop back down to around about 40,000. Between 42,000 and 40,000, that's the big dump. Now, if you're going to be if the price is going to move up to 57,000, and you can cash out or take a big chunk of your profits off the table and wait for the big correction move on Bitcoin, then you could go ahead and take advantage of the move going further down south. So which means that if price moves down from 57,000 all the way back down to 40,000, and you can use all the profits you've generated at 57,000, you can reinvest that back again because you want to stay in Bitcoin. And I'm not suggesting you go ahead and clean up house at those levels, but I do suggest that you start taking some profits and wait for the correction again and go and reinvest. Let's take a look at some of the altcoins that haven't moved yet since Bitcoin has started its rally. Okay, because that's where the opportunity lies right here. So let's go take a look over here, and I'm going to go do my. Let's just take a look here. So in the last 24 hours, right? In the last 24 hours, we can see that we have seen an uptick in the actual market cap. So market capitalization has definitely increased by 3.6%. But let's take a look at the altcoins. What altcoins are not moving or have not moved? We've seen a lot of the altcoins are already starting to rally. All right, they're up between 0.5 to 3.5 to 5%, some of them, and 9% like we have on Solana. Solana has gone up really nice. It was a great opportunity. We spoke about that in the week. And let's see what else we've got here. What else has not moved up in the last 24 hours? Wow, not a whole bunch. Okay, here's one right here. Alroyd. That's not going to be Quantit. Nope. So we've got most of the level 1 altcoins that have already started moving. Look at Phantom. 27% up in the last 24 hours. Insane. That is one right here. And then we've got, let's see here. So, although, let's see, a dash is up to, man, look at that. All the altcoins are up. All the altcoins are up. The opportunity was on Monday. We spoke about this inside of one of the sessions on Monday, and we said, altcoins are going to rally, and we're already starting to see that take place right here. So all the altcoins are up. There's not one of them right now that I can say. Polkadot has not moved, but I mean, look, we haven't seen Polkadot move but in the last 7 days, it's maintained its actual value. So it's been a small little dips that we've seen over the last couple of days, but we've seen it maintain. In fact, we actually saw Polkadot actually rallying before we saw any of the altcoins or even Bitcoin. We saw that starting to rally. So we are starting to see an upside move on there. Are the altcoins at a place right now where we should be excited about? Absolutely. I believe we are going to see a continuation of the altcoins rallying, as we can see a continuation of Bitcoin rallying. And when we get to Bitcoin at 57,000, then maybe at that level we may start thinking about taking some of the altcoins off the table and reinvesting once we see the next correction. All right, traders, well, that's pretty much it for me. Exciting times in the market right now. We're going to see some good moves as we head into the weekend. Have a great weekend. I'll see you in the next video. It's the Epic Big Dog signing off. Oh, by the way, before I go ahead and sign off, don't forget to smash the like button. Smash the like button. Subscribe to the channel if you haven't subscribed. Show the love. Love you guys. Enjoy the weekend. I'll see you next time.